All right, guys, welcome everybody. Doing a quick sound check, just making sure everyone can hear me. And I believe sound is coming through. So let's get started now. Hey, Karas, my trades, sniper trader, welcome. Guys, welcome everybody. My name is Saul. Glad to be with you. Before we get started, just remember what I'm going to show you is the way. And there's the Scruffy Trader. How are you, my friend? The way I analyze the charts and the way I see the charts and the trends and how I approach the markets. By any means, this is not meant to be a buy or sell signal, recommendation, advice, whatever. Just be careful and responsible for your own trading. On Mondays we usually try to go to the daily charts and we try to have a little discussion about the fundamentals and potential outcomes and medium to long-term opportunities depending on the large biases in the market. If we have some time, usually we go to lower time frames and we try to trade a little bit, but just today with all these bank holidays, I'm not sure we're going to do that. So we might keep this session a bit shorter than usual, but I hope by tomorrow we're up and ready to start trading. Okay. That guy, welcome. Jose, Shane, Scott, welcome everybody, guys. How are you? Anna, happy New Year's to everyone. Hope you had a good end of last year, and you have all your purposes for this 2023. And yeah, let's do it together. So Scott, what's the plan for the 5ers in the new year? We have some exciting plans. So we made a video, you can find it on our YouTube channel, recapping last year and the plans for this coming year. So have a look at that. And yeah, with that being said, let's jump into the charts. Just let me make sure you can see my screens. Let's start with the calendar. Of course, today, a lot of holidays, Canada, the US, New Zealand, Europe, so not much for today. Tomorrow we do have trading and activity, not many events to look at, so it will be a quiet day, I guess. And then as we go after the 3rd into the 4th and 6th of the month, we will start seeing the volatility coming again to the market. So we have the CPI in Switzerland, and lately CPI events have been more important than anything else. As every country is handling and trying to manage inflation, we try to get hints of each central bank, are they keep going increasing interest rates to deal with that, or are they stopping with that? And the interest rate is what ultimately will set the demand or supply for certain currency and the strength of it across and against other currencies. So be aware of the CPI on Switzerland. Then we have the manufacturing PMI and the job openings. These tend to be volatile at the moment, but not as impactful. Okay, so no trend changers for that. Of course, we do have the FOMC meeting minutes, so we don't have a statement. We don't expect any number to be thrown, but traders try to get like hints of, okay, what's the Fed about to do? Okay, are they going to, on the next statement, increase interest rates, or they will not? So around the FOMC minutes, expect a lot of volatility, that's for sure. we already know that their target is around 5%. So right now we're at 4.5 interest rate in the US, and they're targeting 5%. So we need to expect two more increments, or maybe one more, but that's already known, correct? So everyone, that should be already priced in the market. So unless we get different messages during these minutes, there shouldn't be a lot of surprises. And then we have the ADP non-farm employment change, and lastly on Friday, and this is the big one for the week, would be the non-farm payroll on Friday. Now, if you look for more details on what's been happening, the actual number for the last 5 times or 6 times have been actually greater than the forecast, which is good for the good for the currency. So if this trend continues, okay, we have the forecast of 200, and we get a higher number of that. This will also be green, and we will see more faith into the US economy, and maybe more money flowing into the investments in the US. Probably something will happen there with the stocks market as people try to regain the faith in the US economy, fighting inflation and seeing inflation going stepping back a little bit. So let's wait for that one, okay? And we'll see how's the chart behaving, and we'll try to get some positions off that. Now, if we jump into the chart, we start with the dollar index, and we've got into the large question if you're not familiar with the dollar index, it's just the behavior of the US dollar against a basket of currencies. That's the US dollar index, which is mainly built with euro. So if we compare this with the euro chart, you will see it's quite the opposite. Okay, so we could do the same analysis on the euro USD, but let's just stick to the dollar index. And if this was a very clear uptrend, and we had the opportunity to pull back and continue, or pull back, or whatever it is, this has been a very deep movement to the downside. And as we continue to the downside, we have been losing strength. And if we do a comparison between this movement, okay, style extend right, okay, if we compare this impulse to the downside, like the break to the downside, and what has been following afterwards, okay, this movement there, we see there's a change in behavior. Okay, we have like a strong impulse, and then we're losing strength. Okay, we're moving downwards, but in a very slow way, in a compression, and these kind of movements are expecting for fundamentals to either break hardly to the upside or to the downside. Okay, after these kind of movements, we usually tend to have like continuations, like bounces, and after this movement, it's hard to tell. Okay, because I don't see any clear supply or demand area, in the left side. So it's clearly, the last part of the year, low volume, low volatility, and we're just expecting what's next. Are we going to push to the upside, or we're continuing into what's going to be the beginning of a bearish trend on the US dollar? Okay, so we need to be careful with that. I guess we're going to continue with this compression towards across the week until we we have any strong fundamentals. Maybe the NFP is going to cause the breakout of that. If I was purely technical, I would read this as a compression, where demand and supply has been tested and consumed across that. And if we were meeting a strong demand area down here, back here, I would be buying this, okay? But there's two things I'm missing. First, I don't see the very strong demand area. And second, the fact that the compression channel might be because of the end of the year and not because of balance in the market or whatever it is. So it's I need to wait a little bit more and see what the market tells me, and then I'll decide if I go long or short. But if there was a strong demand area, and we'll see some pairs we are trading at a strong key area, okay, area of interest, I'll be looking to buy this market, okay. But let's wait for the numbers and we'll decide on that. Now let's start reviewing just some of the major pairs, and then if you have, guys, any specific pair you want to review together, we'll do that, okay. Indonesia, welcome. No, why are the spreads pretty high today? Is due to the bank? Yeah, so that's the reason, money mind. There's no banks today, so there's no liquidity. Our LPs are also closed, and there's that's why you see this spread so high. So wait till tomorrow, everything should be back to normal. Afternoon, be good to catch up prior to Trader Live event. Yeah. Gary, thanks for the reminder. As if we speaking of 2023 goals and projects, the Traders Day Live event is one of the big ones, okay, and we're investing a lot of resources into that to make it a meaningful event, an educational event. So we're excited about that. So Gary will be there, the Scruffy Trader. Anna will be there, and I hope you guys here are considering joining us. It's going to be meaningful, educational, fun as well. So it'll be good to know, the faces behind the names. Do you take trades once supply and demand area has been hit once already? If so, how many times will you take the trade? So Mark, we did a strategist marathon, and I went over how do I trade my supply and demand, a specific setup, which is the compressions, like this compression right here, but only when it approaches a supply and demand area, okay. So I don't know if you see that or not. If not, go to the recording and watch that. And I trade, I'm only keying on a supply or demand area to be valid one time. So if that's being already tested and then the price goes back up, I usually do not trade it again. And today we will not have the opportunity because spreads are very, very high to what I do. But please join next week or next training session, and you will see me how do I manage my trades and how do I trade and how I cut my positions in little chunks and all my trade management, which is something to maybe you'll find some value in it and you can apply that to your own situation. Yeah, okay, so Euro USD, okay, and we had this, the Euro USD, we've been covering that very closely, and we had the whole story when the market was approaching the parity level and all those discussions of, okay, are we breaking the parity level or we stay above the parity level, and all the interests of having the Euro USD above the parity level and not having such a strong dollar. And we see the implications of a very strong dollar across all markets. and there's a reaction, okay? We had this first reaction, this first impulse. This first impulse left two demand areas, okay? At the parity level 1, which is very meaningful, and the extreme one, which is down here. So as we stay above those areas and the market coming back those areas, I will want to buy those. However, again, we've been discussing this compression, okay, this kind of flag. Those tends to break to the opposite side, okay, to the downside. And if we see where we're trading right now, okay, this is the supply area, okay, that's previous supply, and we didn't see, or we haven't seen a reaction from that area. Okay, so this area had the opportunity to react already. Okay, when we had this real reaction, but we have been, you know, back there again. Okay, we haven't seen a break to the downside. And fundamental releases tend to happen at those areas. So now this will kind of, you know, confirm, are we breaking to the downside and a new supply area has been formed, or we break into the upside, and that confirms the change, you know, in trend, because this was the attempt to reverse the trend. Okay, we were following a downside channel or trend, and we broke it to the upside, but since then we lost strength. Okay, if we throw any strength indicator like the relative strength index or whatever it is, we will see a lack of strength in this movement. Okay, in comparison to this movement right there. So now we need confirmation, and the confirmation will be after a break of this area, if we go to the downside or to the upside, and then the retest of those areas, you know, that's my next trading opportunities. So just to give you an example, if we now break to the downside, my very next, okay, I don't think there will be a lot of demand across this channel to hold a fundamental down movement. So I expect price going and revisiting this demand area, okay, the parity level. From there, I want to be buying. Okay, but if we break this to the upside, okay, we might be, you know, aiming to the next supply level, which is, okay, up here. From there, we have a reaction, and now this area, which was previous supply, will be turned into fresh demand. Okay, so from this area, I want to be again buying. So if we go back, I buy. If we break up, I wait for the retest of the demand area, and then I buy again. Okay, that's my plan for Euro USD. Yeah, Mark, with pleasure. Juan Carlos, thank you for the wishes. And this same setup, guys, we have it almost across all the major pairs. So if we go to the pound, and I think, you know, we might go to the yen pairs. Those have been moving a bit better. You know, lately hasn't been a lot of movement in the rest of the pairs, but we have same story or similar story. Okay, we had the impulse to the upside on the pound, and then, you know, this flag, this compression, and we've pulled back a little bit more than we've done on the euro. But again, we're just waiting for, you know, the year to restart and to see where we're going. Let's throw a monthly chart. Okay, if we were, look at this. It's amazing. If we were trading the monthly charts, okay, if I was just opening this chart, I would be looking for my very next trade, which would be a retest of the demand, correct? Whoop. We have the impulse down, the pullback, then we even have a reversal bar or something like that. Down here, up here on the monthlies, I would like to see a retest of this previous demand, and then a movement like that. So if we zoom in into the dailies, we can refine that. So my demand area is not as large. Okay, it would be something like that. So I just want to see if the market retests that area, if it continues with this pressing movement towards the demand area, and then I would like to buy from that area. I don't see, if we already know we're aiming for a 5% interest rate on the US dollar, I don't see this breaking further to the downside. Okay, I think the next movement is for a weaker dollar against other currencies. What do you consider a channel hitting its sides of the channel at least a certain amount of time, such as 3, to be valid in your eyes? Yeah, that's a good question. I've never, ask myself how I define a channel. I just need to be a lack of supply and demand. So I just need to see that up and down movement, and we have very clear, maybe gold. No, that gold, it's a good example of that. Okay, you see how the demand and the supply are being consumed. So I guess if we were, on real time here, we don't have a channel. So yeah, it's hard to tell where would I consider that a channel. I don't know if there would be a channel. So yeah, maybe a minimum of 3 would be a good count to consider it. That's a good one. Maybe there. Yeah, so that would be maybe 3. Never ask myself about how many touches to consider as a channel. But there you have it. Like visually, it's very easy to spot those. Okay. Let me show you the dollar yen. Those has been the ones that have been moving the most, and we have the clear movement to the downside. So here we have the confirmation of this being a trend reversal. And if you heard of Gil's presentation, okay, we had the break to the upside, or we have the movement to the upside, and the break of this area right here, of this pivot point, that's the confirmation of a Quasimodo. That's the way Gil presented, and the break of that low and then the continuation lower, that's confirmation of a trend reversal. So all I want to do here is looking for opportunities to sell, okay? Because we already we're approaching, of course, that support. That will be the next target. From there, a bounce and then continuation. Like, look how we're moving very easily to the downside. We take time to go up, very easily to the downside. We move sideways for a certain period, a strong bearish candle, then tiny movement to the upside, strong bearish candles. So I just want to be continuing this trend. Since I don't have a lot of demand back here, there will be some support. We might go sideways for a moment, but as we go to the upside, I want to sell. Now let me show you how I do the drill down analysis from longer time frames to short time frames, because sometimes what it looks as a demand area on certain time frames, if you go for detail on lower time frames, you realize it's not a valid area. So let's just do that exercise together. So let's clean up it. Okay, so the very first area I identify is up there. Identify another area there. Identify another area there, and another area there. Okay, so from the daily perspective, I want to wait for price to go back to that area, ideally on a channel, okay, on a compression. Then I'll be shorting. If this gets strength to the upside, then I'll wait for price action to tell me to go short, okay? But if I get a channel, okay, going towards any of these supply areas, then I'll be just looking to short. So now let's go to an hourly chart, and let's try to refine those areas, okay? So we have the first one here, and then what it looks like a good demand area on the dailies, has another. It looks different on the hourlies, okay? Because we have that area and that area, and we suddenly see the large area on the dailies is not, it's split between different areas on the hourlies, okay? So it gives you different opportunities to short if the market goes to those areas. So that's the dailies. That's divided into 3 different supply areas. they look good. Okay, that's extreme, mid-range, but all of those like valid ones. This one, it's much clearer. Okay, we have a more defined supply area right there. Let's see that one. Okay, here you see the significant movement comes here. Okay, from this movement right here, wouldn't have a significant movement. So the significant movement starts only there. And here the same. Okay, so now I'm more refined. Now I'll have more precision when I enter my trades. Now have more precision where my supply areas are created. So while it looked like a very large supply area here, I have refined it going into lower time frames. So now I'll wait, you know, my very next trade here is either nothing or if so buying, correct? Trying to, you know, to get the bottom for net retracement, or just waiting for the market to go to that area and short, to that area and short, to that area and short. And if I see that movement is created on a channel, that would be the better. And I believe this same pattern, if we go to Euro Yen, we will have similar movements. Okay, we had a really very strong movement to the downside, pullback, very strong movement to the downside. On the dailies, it's very clear that we have. We need to go to lower time frames to see how it's that form, but let's see this one and that one. The only difference here is on the Euro Yen, we do have demand. Okay, so this is a strong demand area that we're just, you know, about to test, and we also have this demand area. Okay, these areas are stronger than the ones we saw here. Okay, I don't see a very strong demand area here. So my bias is much clearer here on the dollar yen and pound yen. We have last. Okay, we need to go to lower time frames to see how is that form and where's the demand created. But we have a very strong supply, and we need to go check how is that form. Let's do that quickly. Okay, so that one, we can refine it much better. Only to that. Okay, because after that, that reaction, we had like compression and continuation, but not very strong. So only that area. And that one is a good one. Okay, and let's see how's the demand formed. To try to define it a little bit. So to define, we have different areas. We have that area, the extreme. From there we see there's a disconnection, and we haven't tested it very much. We had this one, not sure how strong it is, and we have, not very clear, but it looks like at the breakout. From there we had a break, and then just the disconnection. So let me there we go. Now let's go back to the hourly. There we have it. So we are right now testing what we identify as a demand area on the hourlies. So we can expect a bounce, okay, off that area, and if not, probably down here or down here. At the bounce, we will have the retracement to that supply area or to that supply area, and from there I'll be looking to short. So that's the pattern. And I think you know, all the rest, they look very similar. All the majors, we have the bounce and then the compression, so we need more confirmation. Let's see if there's something else interesting. Yeah, so I would say we have the yen pairs, you know, following the yen movement, and we have the major pairs following the US movements. I don't like, so the euro, this is the dailies, okay? So I get my big biases from the dailies, and then when you see me trading the lower time frames, I do this same exercise but with lower time frames. Okay, so I go to the 5-minute chart and 1-minute chart, and I trade those areas, but I try to stay with the bias from the dailies. Will sort of, yeah, USD JPY, it's certainly the only one's movement is moving, but I don't think, let's see. Yeah, you see the spreads is how it's very, very high, and the feed is, it's, all this bad data is from the LPs, not having a lot of quotes. So I don't really feel comfortable like trading right now. I would really wait for the data and the feed to be as normal, and then the spreads going to normal, and then going back to trading. But yeah, my bias here is to the downside. I just need to wait for a bounce to key areas, and then I'll look to short. Yeah, long void, the time frames I use, so my long-term trading, like long term, happens on the dailies, but I take that same bias and I try to align my bias during my lower time frame. So do come back next week and we'll try to show this, real time. We'll go to the 5-minute charts and 1-minute chart, and we'll trade this together. Okay. Yeah, Scruffy Trader, that's exactly bias from the daily, confirmation 1 hours, and then you enter on lower time frames, 15, 5, 1, whatever you want the most. Yeah, so marking gamma, dollar yen on a good demand. So we need to see if there's really demand here. Okay, so for that, we have our areas marked already here. So let's just say, so we're saying we might be at a demand area. So we need to see if there's demand there. Let me not extend it to the right. Let's see how that looks probably on the hourlies. So let's try to understand what happened on the hourlies. So we have this demand area. That's a classic one. That's a classic demand. We have the drop base rally. Okay, that's a clear supply area, and we haven't tested that. Okay, that's good. And since then we just continue to the high side. Although we had this attempt to retest the downside, but that extreme hasn't been tested. Now let's extend that to the right, and let's jump back to the dailies. Okay, so we are right now, okay, we were speaking about this demand, and there we are. Okay, I would like to see a reaction. We just need to make sure that test, okay, the first time we approach the demand, we had a reaction. Okay, you see that we approached it very aggressively, and we reacted. There was a this pin bar, and then we reacted with that channel. Okay, and now we're approaching the area for a second time. So it's not the first time we're testing that. Okay, it's the second time. That was the first test. Okay, we had the yeah, so we had the demand back here. We never went back. No, it was for how long? It was 100. It's 140 days. Okay, we never went back to it, and see how it's amazing. Okay, the first time we went back to it, we reacted. Okay, so there was the reaction, and then a little bit of confirmation. But we're coming for a very strong supply. Okay, we're now coming from a bearish market, so we're pushing to the downside. So I wouldn't key on this holding one more time. Okay, that might happen. We might have another reaction to the upside, but I see much more selling pressure than buying pressure. Okay, so and if this breaks now to the downside, might create a new supply area. Okay, that would be a swap zone, a swap area where in this case demand would turn into supply. So then I would wait for a retest of this area and then try to short it from here. Yeah, I think we're covered, guys. I think we've covered pretty much everything. Let's see what's going on with stocks, and if not, we'll good to wrap it up. Crypto looking not promising. Yeah, not great, huh? We just see the lack of interest on crypto lately, but we've been coming from very strong bearish movements, and I don't see any good demand area to buy from. Probably that was the last one. No, we broke that. We're trading down. Okay, if we use the same analysis of supply and demand, this area, okay, the 20s, 1820, it was broken already, and we have nothing left. So unless new fundamentals are formed and something happened new, not related to previous demand, because there's nothing on previous demand, and that's why we're struggling to turning this into a bullish market again, there would have to be a new fundamental and a new reason why Bitcoin becomes attractive to investors, and then there's fresh demand, completely new, created right now. Other than that, I don't see anything but selling opportunities. Gold, oil, and I want to see the US market. I believe we spoke about this demand. I think one of the trading rooms we saw that together. We already checked that, and we're struggling to react from it. So we tested it once, twice, and we're not pushing to the upside. So the lack of strength to push the market up just tells me about the possibility, like strong possibility for this having a next push to the downside. Okay, let me show you that one just very quickly. I'll show you the demand. Okay, you see the demand back here. I hope with some time you start identifying, training your eyes to identify these areas. Okay, but as we approach that, we reacted, and we've been kind of failing to push the market to the upside. In the other hand, we have a lot of pressure to the downside, like selling opportunities. So yeah, I'm not a huge fan of selling the stock market. I'm more a buyer, and that's how I build my portfolios. I'll slowly buy, but I don't think this having a strong push to the upside, and the fact that we're aiming for a 5% interest rate, investors don't see attractive an 8 or 9% return on the stock market, taking all that risk, if they can make 5%, having their bonds or their the cash in the bank. Okay, so I don't see a turn in the near future. I think we're going to the the next levels, and probably we need to wait a little bit, and then later on the year we might have a turn to a bullish market. Okay, guys, I think we'll wrap up here. Just to summarize what we discussed, the dollar, we're waiting for confirmation. We know what we're going, to get in terms of interest rates, unless there's a unexpected surprise that we might get it. So we're waiting for that confirmation. Either we, continue to the downside, or we confirm the turn in the market and we go to a bearish US dollar. And we have, on the other hand, the yen pairs, where it's looking very, yen strong. So a lot of, dollar yen selling opportunities, euro yen selling opportunities, pound yen selling opportunities, like buying JPY. And yeah, let's wait for a few more days, volatility to come back into the market, and to have more clearer picture what's going to happen. I'm taking the day off the charts for today. Okay, not having enough trading, but hopefully tomorrow we're back to normal. And I'll see you in the next trading room, probably Wednesday over Traderlicious, not sure, and if not, next week over here, back to normal. Till then, guys, thanks for coming, thanks for staying, and if you haven't got your tickets for the event in London, this is the time to do it. They start to, we're around half the way with the tickets, so around 50% of those have been sold. So you don't want to miss your one. So okay, I want to meet you there. Thank you, guys. Have a nice week. Have a nice and a great 2023. And yeah, for all your success and all the best, guys. Bye bye.